Paul Sponcia, CEO of the IT company, wearing my signature technical person hoodie today, and coming to you from San Francisco, but I'm really not. And we've got Adam Slack, again from Two Roads, and we have Chris Trump, who presents as our Christopher Trump. He is not on video, he is only on audio. And we're here to do part 3 of the PPP webinar. The SBA dropped the forgiveness application, and there's been some other updates and stuff over the past maybe week and a half, 2 weeks. And so we want to give everybody an update and allow everybody to jump in while we're talking. Please ask questions, do all that stuff as well, and we'll try to get to this. So we're going to try to do 40 minutes of content and 20 minutes of questions, but we may interrupt in the time frame too. So I'm going to stop talking because, as usual, on this topic, I bring very little value, and I'm going to turn it over to Adam and Chris, who are going to kind of run the show.
Thanks, Paul. Chris, do you want to kick us off, or you want me to?
Sure. So there was a couple of pieces of guidance that came out this.
We losing?
Okay.
You're back.
Back. All right, there we go. And so we are, this is the first time I've actually tried this on our firm's web Wi-Fi, so I guess we'll get to see how good it is. But anyway, a couple of pieces of information came out this past weekend. Obviously, the most important, which probably, really for most everyone, is some guidance we've been waiting for a long time, and that is related to the loan forgiveness portion of this. As most of you on this call most of you probably have a PPP loan that's out there, and one of the great features is that the loan will be forgiven if it's used properly, and you don't forfeit that right by laying off people and not rehiring them or reducing their wages. So that some information for that has come out over the weekend with the application and instructions for the application for forgiveness. In addition, there was a small another kind of update I thought was kind of helpful to cover briefly, just to kind of get that out of the way. We thought, Adam, if you go ahead and take it, but there was initially there was some a lack of clarity as to how to handle partnerships, and a lot of people applied for PPP loans and were not permitted to get the full loan amount because they weren't allowed to include the amount they pay their partners. And so guidance came out subsequent, which made it clear that you can get that amount, and the partnership itself will be the one who applies for it. So why don't you explain that, Adam?
You were on a roll there, Trump. I thought you would just go ahead and run with it. What Chris and I did was we tried to break down for this application. Oh, there's Chris. We got the video going. What we tried to do was break down from this application probably about 8 points that we see as potential changes from what we understood it to be before. And so, as Chris was pointed out, one of the first ones is partnerships. Now, this one was a little bit of a funky one, and seasonal employees for that matter. It was a little bit weird because some bank institutions were saying, yeah, sure, come on through in the first pass with partnerships, and other financial institutions were saying, no, it doesn't count. Unfortunately, those partners could also not apply for any kind of 1099 coverage as well, so they were kind of left out in the cold. Well, the SBA has come back and said, no, you actually can apply for this as the partnership. So the calculation is just the same as it was the first pass through. So you want to get back with your financial institution if you were denied at a partnership level. And it's not $8,000 a month. Chris, you had the exact number. It was like $15,000.
$15,385, yeah.
$15,385, a number that will live in infamy with us forever. If you make more than that over a 2-month period, then it's just a 2.5x your pay. If you make less than that, it's 2.5 what you were pulling out before. So you want to rerun that calculation on your partnerships and take it back to your bank to reapply if you so choose. But again, some institutions were letting this fly through the first pass and some weren't. Seasonal employees apply the same way. It's a little bit nuanced. So with that, because there's about 1,000 different variations that we could go through, we're not going to talk through the calculation. But if you feel like when you ran through the application the first time, your base coverage period or what you used did not cover your seasonal employees that you're currently in the middle of hiring right now, you want to use the same logic and go back to your financial institution to let them help you run through that from a 2.5 times that potential payroll period so that you're covered through this season. So that's good news for us. It's just a matter of going back and reapplying.
A little clarification, just to understand from my perspective. If I applied and was given and received funds, but with this new guidance, I can go back and receive more, is what you're saying now.
If your partnership was excluded. So some institutions, we had a couple of clients, for example, at some banks, which I won't name, who came back and said, no, if it's a partnership, the partners cannot be included in payroll. And so they pulled them out when they ran through the application. So if that happened to you.
Yeah, I was just saying that's true, even though partners, the portion of the distributions to the partners are actually subject to payroll taxes.
Right.
And they still were not allowing them to, which I mean, when you look at the statute itself, I could understand why they would be hesitant because it doesn't sound like it.
Right.
But additional clarification came out in the middle of April, which basically said, no, they can partner, but the partnership applies and then just includes that portion on the K-1 for each of their partners in the calculation for its loan amount.
Yep.
So.
All right, Trump, I'll kick the next question over to you.
Sounds good. So, so just to cover the application, just kind of, so the SBA released the application along with detailed instructions on how to fill it out. It did answer quite a few questions we've had along the way. One thing it did not come with, I thought this was kind of funny. I saw this in one of the articles that cover this. Unfortunately, it did not also come with blueprints for a time machine to go back in time to actually, apply the money like you would have wanted to fit this application. So, unfortunately, we're 4 weeks in, and in most of these scenarios where there was some question about how you could do things, this is kind of what I mentioned on the last. I really kind of anticipated that there would be the doubt would go to the benefit of the borrower, and in most instances it did. There still are some additional questions that have not yet been answered, and so the hope is that this is not everything they're going to send out on loan forgiveness. There's still a ton of questions folks have that the loan and the application instructions don't really cover, but there are some that it did answer. So the way that we're going to kind of handle this is to kind of like, okay, what did we know before this came out, and then now what clarifications or new information did we get from the application and the loan process, and the loan instructions in filling it out. We're not going to actually walk you through filling out the application. However, your banker can help you with that. We can help you with that, individually. It's just everyone's scenario is so different. Their situation is so different. It wouldn't benefit people for the most part. But in that regard, one of the first things that it clarified was that 8-week period. Adam, you want to take that first?
Yep. Sorry, I was answering a question in the Q&A here. So let me finish that. Yes, the 8-week period. It was initially saying that you could only use from the 8-week period from the time the funds were deposited until 8 weeks prior to that. But the way and Trump, actually, let me pull back that up. But it's actually 56 days from the first payroll after the PPP funding. So if payroll is paid biweekly, so an example they give, let's say the PPP was funded on 4/20 and the covered period is until 6/14. However, your first payroll period is like 4/26, then you can go to 6/20. So it's a 56-day period from when your payroll was after that. So they're trying to kind of help mitigate the questions from our last one where we were saying, no, just trust the 8-week period and you're going to get caught up in the payroll. So there's a little bit of nuance there.
So they basically created a second 8-week period that you can use that's different from the other non-payroll related stuff that begins on the first pay date after you receive the loan proceeds, right? So all the other non-payroll stuff still is the 8-week period.
Still the same 8-week period.
Gotcha.
Yep.
Can you? One person just asked if you can repeat that, and I would say the same thing. And there's a little clarification because one of the questions that came up a lot was, if I get it on the 20th and my first payroll is the 21st, does that payroll period count? So does that change that?
No, that payroll period counts, but your 8 weeks is for payroll specifically. Your 8 weeks is from your first payroll date. Okay. So let's say you get it on the again, we'll use the 20th. Your face payroll period is on the 24th. Well, then your 8-week period for payroll specifically starts on the 24th, not the 20th. Everything else is starting from the 20th. And so you've got a little bit of a gap here on, the 25% non-payroll related items are from the 20th. Your 75% or above payroll related items start on the 24th.
And the
whenever that payroll
clarification,
period is.
and the clarification being again that the 24th included stuff before the 20th, and that's fine.
So cash basis from payroll perspective is the way we understand it.
We'll touch base on that in just a second. Right now, the big focus is when you're talking about the 8-week period after receiving your loan. Generally, it means for all the non-payroll expenses, it means the date you receive the loan proceeds and 56 days, the date 56 days later. But you have the option as a borrower to elect to instead start the 8-week period specifically for payroll costs on the date of your first pay period, that pay date that after you receive the funds. So it just gives you an alternative. They call it an alternative payroll covered period. So you'll see throughout the application for forgiveness and the instructions that reference either the covered period or the alternative payroll covered period. And so as you're looking at wages and employee numbers and stuff, you're going to be looking at the alternative payroll period as well as in terms of calculating your payroll costs. So that's a pretty big clarification. Now to touch on the question you just asked, Paul. There also, the CARES Act described, what is eligible for free. Like if you use the loan proceeds for these eligible expenses, then it will be forgiven if you satisfy their requirements, right? And so the term that they used in talking about these payroll costs and other eligible expenses was if you incurred and paid them during the 8-week period, okay? The problem there was we had a lot of questions as to, we knew that you were eligible for forgiveness to the extent you used the loan proceeds to pay payroll expenses, rent, mortgage interest, and utilities, and those things that existed as of February 15th, that is. But that paid incurred was really confusing everyone. Create a lot of confusion. So just the question you asked is if you pay it on the pay payroll on the very first day you get proceeds and it relates to the 2 weeks prior, is that covered? So we were unsure about a lot of that stuff. And what has come out is basically if they have generally, the rule is now if it's paid or incurred during the applicable 8-week period, then you are going to get to include that as an expense that's eligible for forgiveness in essence. So there's 3 categories I want to just kind of break it up into. You've got payroll expenses and other expenses that are incurred during the 8-week period and paid during the 8-week period. That's very obvious. It's inclusive. We've always known that. That was the safest bet. Don't include anything else up until we got this clarification. The second category is expenses that were incurred during the 8-week period, okay, and paid after the 8-week period. Well, the instructions and application make it clear that as long as it's paid as of the very next date that it's scheduled to be paid. So let's take rent, for example. Let's say you've got rent that you pay at the first of the month and your 8-week period ends in the middle of a month, okay? So you've got 2 weeks that are going to be in your 8-week period that you have not actually paid rent for yet, okay? And they're saying that allocable portion of the next month's rent for that 2 weeks period, it can be included in your calculation of your rent expenses for determining forgiveness. So those expenses that were incurred during the 8-week period and paid after, those are going to miss. And then the third category is those that were incurred prior to the 8-week period and paid during the 8-week period. And that's not specifically addressed, like it's not like the other 2 are specifically addressed in the instructions, but the way that they address them, it seems pretty clear that if it was incurred prior and paid during, that it's going to be part of the forgiveness calculation. So that's a big win for a lot of folks trying to figure out, like if you're behind in your rent, for instance, and then you you paid it on, during that 8-week period, the last month's rent, you're going to get credit for that, subject to, of course, the 25% limitation.
Right. Essentially, it feels like they're allowing us to double dip there, right? I mean, it's kind of saying you can pay it in the front end and the back end on this. I mean, it's the way it's again, how it's reading today.
Exactly. Those were questions we had, and they basically resolved both those in favor of the borrower, right?
Right.
So the extent, I mean, the idea is that they're trying to get money flowing. There's no real reason to try and prevent it. There's a couple of questions that aren't answered in this though. So accelerated payments. So the CARES Act made real clear that you can't prepay mortgage interest. That's really all it says. The instructions don't talk about what if you want to prepay your rent. That's rent on real property and personal property. What if you want to accelerate some salary in that 8-week period and pay that? What about other payroll costs? Like the one you see most common, I think I've already seen a question pop up, is, retirement contributions, or maybe your healthcare premiums, you pay them early. Can you actually include those in as a forgive? If you use your loan proceeds, will it be forgiven to pay those? And the answer to that is we don't know. I would, from my perspective, rent looks an awful lot like mortgage interest payments, and so I probably be real hesitant to do that myself. Salary and wages. There's so much detail on what salary and wages you can actually include that the leaving that question open, I think, begs the question of whether you're kind of being a little too greedy if you try to do that. Other payroll costs like retirement contributions, I can make a pretty good argument for retirement contributions, but then the question is, is it just the 8-week allocable period that that you would you prorate it 850 seconds of of your annual retirement contribution? And so those are good questions. I think if you did the 850 seconds, you're probably going to be pretty, even though you don't have a retirement contribution that's due during the 8-week period, you could go ahead and make it. If you limit it to 850 seconds, I think I'd feel pretty safe with that. Could you do the whole first half of the year? Probably. I think that's probably something I feel a little safer doing. I do not think I would try and make my entire year's payroll, retirement contribution in the 8-week period and try and claim that is, going to be forgiven. The other question that's not answered is, what about raises? That additional salary and bonuses to employees. So the first thing you need to know is it will show up to some degree because there's a comparison. Well, it doesn't necessarily show up, but you have to put in the actual application itself how much you're paying someone. So there's a pretty easy way for them to figure out if you've actually increased your wages or not to someone. And so obviously you're capped at least the 15,385. That's a bright line rule per employee during the 8-week period. But otherwise it's not, there's not really specifically capped in any way. I would just encourage you to proceed with caution. I know some folks, we have for example, if you've got an employee that's like gone above and beyond during this time and you feel like you ought to give them a bonus, that would make sense. Or maybe there's some people that are hesitant to stay because of their fears, and you give them some kind of hazard pay, and like Amazon's doing, some of those things. To me, there's no limitation on that. And to be honest with you, I really doubt that the SBA is going to come in and say no to that. If you're paying, again, you're capped at 15,385. So anybody that you're increasing is going to be less than 100,000 a year person, and I don't know that they really care whether you do that or not. So, but based on the information we have right now, it's just not clear.
Yeah. And I'd say, we said this in the last webinar, and we've got some questions that are kind of coming through that I'm not sure this is going to answer them all blanketly, but just use business sense here. Like, the more you try to cheat the system or try to maximize the system, you're just putting yourself in a risky position. So, everything Chris was just saying, do. If somebody's going above and beyond, pay them. If there's a bonus that's warranted, pay it. I think they're trying to alleviate some of those fears so that people just don't get locked down. What Chris said at the beginning was they're wanting money to flow. They're wanting money to flow. So, if it's just kind of use the litmus test of is this logical or not? Or is it I'm trying to maximize every dollar that I can out of this thing? So, if you can answer one of those two questions, you're probably going to know which way you should go on it.
Very good. one of the other things so that's a clarification. One of the clarifications we received, last week was on the whole, all the confusion surrounding the certification and the FDA's, whether they were going to kind of look behind the certifications that were required to be made. Specifically, the one that where each borrower had to certify that the loan request was necessary to support their ongoing obligations of the business. And so, if you missed the little update that we sent out, I just summarized briefly where they fell down there was if the loan's under $2 million, then you do not have to. It's basically you're deemed to have made the certification properly. If it's over $2 million, then they are basically saying they will look at that whenever you make your application for forgiveness. And so as a result, there is a box on the application that says, is your loan over $2 million? Okay. If it's not, do not check that box because you do not want to make that mistake. Okay. If it is, basically what will happen is that they will look at it in part of the review. They're going to look at every single application for review is what they're saying. Part of the review will include, did you properly make that certification? The problem is they still haven't given us any information as to how they are going to make that determination. The only thing we know is what the prior FAQ said, which something to the effect of, do you have adequate sources of liquidity without it? The good news is that if they find that you did not make the certification properly, they will not forgive your loan. That's the consequences. And if you repay it, that's it. Yep. Okay. If it turns out that you do not repay it, then the SBA, they're basically saying if you repay it, they're not going to come after you if you repay it. But if you do not repay it, they could potentially do so, and they could also refer you to other agencies. The SBA's promise to not go after you is probably enough, to be honest with you, because I don't think any of the other agencies will actually on their own do this because of all the gray surrounding it. Right. So I think we're in pretty good shape there. So,
Chris, just to be clear, like you have to pay it back. It's not like you can just convert it. You can't, if you had adequate sources of liquidity, you can't just say, well, I'll just convert it to a loan at 1%. You have to repay it.
I think you have to repay it at that moment is what happens. And so, from that,
say that again. You were
whenever they make the determination, I think they'll probably give you a certain amount of time to repay the loan, and then that's it. I don't think
it's a little unclear. It's not real specific there. I mean, it's kind of like that's the way they state it, but then they also state like you can convert it to a loan. So like I think Chris is right. I think they're going to say go ahead and pay it back then, but they don't talk about the loan option in that segment of the.
Yeah, it could be that they just let you go ahead. They're just not eligible for forgiveness as long as you pay it out by the two years according to the payment. The payment plan that is for your loan, that may be sufficient. So
now I will say, Chris, can I make a little asterisk on this that I think
I actually made a clarification there, and I may have, but go ahead.
Okay. One of the things that a lot of people are up in arms, not a lot of people, I've heard some people that are up in arms about the fact that IRS is saying, hey, this is not going to, you can't deduct the expenses associated with PPP. Well, this is kind of a way for the government to tax those who didn't really need the money. So let's say you got $200,000 in PPP, but your revenue actually dropped by $200,000. You use those funds regularly, the way you were supposed to, appropriately associated with PPP. Well, your net income at the end of the year really doesn't change any because your revenue dropped by 200 and you got 200 in the PPP loans. Whereas if your revenue didn't change any and you got 200,000 in PPP and you spent it as you should have spent it, but those expenses aren't deductible, it's going to flow through as net income, and that's where they're going to tax it. So they're kind of saying, we want you to use this money. The way I read that when I see the IRS and the SBA and how they're talking about this thing is they're saying, we want you to use this money. We want you to put capital out into the marketplace, and we're just going to make sure that we tax it on the back end if you didn't truly need it. So they're not talking to each other. They're not saying that, but that's kind of the way I'm reading those two things.
I think it's true. And that's a little bit of a gotcha because they said very specifically it wasn't going to be considered forgiveness of indebtedness income. But then now on the backside, they used old precedent to basically say, since the legislature didn't say otherwise, you can't deduct these amounts.
Right. But if you did need it, if your revenue is off for a month, you probably won't see that tax bill.
Right. It's true. Right, good. Okay, 1 second here. Let me go back. So, what I did see someone say that in one of the comments that didn't the Treasury state that you had 18 months at 1% to repay it? And the answer to that is yes. But if it was in connection with this particular topic, when they said that you had to repay it upon the SBA making a determination, they did not clarify according to the loan terms. It sounded to me like they were going to ask for kind of an immediate repayment, but we'll see what happens. It could very well be that it's just you have to repay it according to the loan terms.
And that's specific to if you had liquidity.
Yeah, if
not just in general. Yeah,
problem.
in general, there's a 18-month whatever, 1% or 2 years or something like that.
Yeah, well, at 1%. And one other thought here is when you do all the calculations, it does not look like the 1% that is accrued between the making of the loan and the forgiveness application is going to be forgiven. So I think it looks like you're going to have to pay that very little bit of an interest. It's the per annum rate of 1% on your loan amount to your lender as compensation for them extending that loan to you. But that would be a pretty low amount. Adam did the calculations for the average loans they're seeing are in the 150,000 range. And how much was it in interest for the 8-week period, or the I guess it's a little bit longer than 8 weeks?
It was like, oh gosh, it was nothing. $80, $800.
Yeah,
sorry,
something little. So
yeah.
So anyway, so I just want to make
Put me
sure
on the spot there, Trump.
I just want to reference that. Sorry, I couldn't remember if you had actually done the calculation. I thought you had. So that's ultimately what happened on that. And the box is there to kind of like, do not check it. If your loan is under $2 million, do not check it. So don't make that mistake. The other topic to cover is that covered in provided some new information or clarifications on related to the forgiveness reduction in safe harbor. So if you recall what we knew prior to this, that the amount that is eligible for forgiveness, let's say you've used 75% of the loan proceeds that you received were used for payroll costs. The full loan amount was used in total and on eligible expenses. And so now you're at a situation where you've qualified for forgiveness based on the criteria they've established. However, because the PPP loan program was designed to encourage folks to retain their employees and not reduce their salaries and wages, there was a penalty if you did so during the 8-week period. Now, much of this is kind of taken care of by the fact that it's going to be very hard for people to hit that 75% of payroll costs if they have not, if they lay everybody off. So if you hit the 75% number, you're probably going to be in pretty good shape. However, it could still be subject to reduction based on this. And so we'll walk through it just a little bit. What we knew before was if you reduce your wages and salary employees during the applicable 8-week post-loan period from what you paid them, and it's this, January 31st through March 31st, if you reduce their wages or salary below 75% of what it was, or a reduction in the amount of 25% or more, in that scenario, there would be a reduction in the amount that is eligible for forgiveness. Also, if you reduce the total number of FTEs that you have during that 8-week post-loan period from that in the applicable pre-loan period, and they gave you some options on what you're kind of measuring that against, then there would be basically a pro rata reduction in the loan amount that's subject to forgiveness. But then they had this really interesting, if you cure by June 30th, then all that's disregarded. So a lot of questions on that June 30th in particular, how you would handle that. Questions about just kind of the methodology, which reduction applies first, et cetera. So they did answer some of those questions as well. So let's walk through it a little bit. So on the forgiveness reduction based upon salary and wages paid, they clarified that that reduction occurs first. So you essentially you take the dollar for dollar reduction on a per employee basis. And it's another clarification is they look at this. CARES Act made this somewhat clear, but basically what the application is, it requires you to list out every employee that you paid salary and wages to during the 8-week period that's post loan, whether it's the applicable payroll period or just the true 8-week period. And you look at what you paid those employees before during the first quarter of the year, and compare that to what you paid them during the 8-week period, and there's a dollar for dollar reduction in amount forgiven for each employee. Okay, you basically take the difference for each employee, add it up into the aggregate, and that amount comes off your loan forgiveness. To the extent it's below 25, you're paying them less than 75% of what you're paying them before. So a couple of things that come out of that is that if you had an employee that wasn't, that did not work, that you had working for you during the first quarter, but did not have them working for you during the 8-week post-loan period, then that employee is disregarded. You don't even pay any attention to that. And if you have a new employee that you hire that didn't work during the first quarter, then that employee is disregarded basically, because there's no prior wage amount to compare them to. And so we understand that. And the other thing they clarified was, and this is probably the trickiest part, it cares that made it clear that there's a reduction if you had a reduction in wages or salary that occurred during that February 15th to April 26th period. Okay, that's the part that can be cured. Okay, but that reduction is disregarded as long as you get that employee's salary and wages back up to 75% of their February 15th pay as of June 30th, which is interesting because that date is actually, for some folks, for many folks, it will actually be beyond the 8-week period. And for some other folks, it'll be during the 8-week period. So it's a very interesting thing. I think, again, we've been trying to encourage folks to hire folks back to get to that 75% number. And for that, for those folks, it forces them to basically keep them on the entire period to at least June 30th. And so if you rehire them, so that's the key is like we've all made decisions already based on the information we had. Most people rehired folks and started paying them even if they weren't working, some of them. And the issue here is you're only going to get that considered, that's only going to go to your benefit, and you're going to disregard any wage decrease if they're still working for you as of June 30th. So that's a key piece of information that we did not have. We did not know how long you had to retain them in order to qualify for that safe harbor. And that also goes, so so that helped a lot to kind of clarify, but it's a little bit problematic for some folks. On the forgiveness reduction, safe harbor related to number of full-time equivalent employees, one of the big pieces of new information was they clarified how you calculate the number of full-time equivalent employees. And Adam, why don't you give them a little bit of a summary as to how they did that? It is a little bit complicated.
Yeah, actually, you teed me up for not being able to say it's a simple one, Chris. So I was going to say this is probably more of an easy answer here. And maybe you know more than me, but the way I've read this is they are using the 40-hour number. I feel like the government, depending on what they're wanting to use for different calculations for them, whether it's insurance or PPP forgiveness, chooses a different one. But for this, it's total hours divided by 40. And then salary, I believe is salary, right, Chris? It compares just to the previous salary period that you had, or the previous salary employees that you had prior to it. So, your salaries compared to salaries, and then your hourly is just total hours divided by 40. Now, Chris has talked about this a couple of times, but there's really two coverage periods. One is the 8-week prior to this happening, the February 15th date. They're also allowing the 8 weeks, the similar 8 weeks in the previous year. Right, Chris, is the way I understand
it? There's several different time periods you can compare to. You get to
add some more.
Yeah, you get to elect which one you want to. So like you definitely look at what your full-time equivalent number is during the 8-week period, whether that's the true 8 weeks after you get the loan proceeds or the alternative payroll covered period. But the number you're comparing that to the pre-loan period is different based upon basically you have two different options for most folks, but seasonal employers have a third. So you just have to kind of
look at seasonal employees. Yeah.
But yeah, ultimately you've got a period that prior to the loan that you're comparing it to.
Yeah, sorry, we're trying to speed through these answers, guys, to get some time for the Q&A. Paul's giving us a clock over here, telling us how much time we've got left to try to answer these things. Was there another one, Chris, or do we jump to the Q&A?
No, yeah. So that's in essence. The point is that some of the new information on the FTE reduction in Safe Harbor is that this one's not tied to specific employees, except with some one limitation here I'll mention in a minute. And the reduction in the number of FTEs during, just like before, it's like with the wage and salary reduction. Any reduction in number of FTEs during the February 15th to April 26th period that occurs is disregarded if you bring your total number of FTEs up to what the February 15th number was as of June 30th.
But that's just the percentage of forgiveness. Your total dollars towards the 75% can count towards any employees that you're currently paying in that payroll period, correct?
The dollar issue is a different question. So just put that
Right.
aside for a second. So once you've calculated the reduction based on wages and salary, which we just kind of walked through a little bit, you then basically create a ratio. The number of full-time equivalent employees you have during the 8-week period, okay, on top of that ratio, and the bottom is the total number of FTE employees in the applicable pre-loan period. Okay, that ratio then is multiplied against your otherwise eligible to forgiveness number once it's including the reduction for the wages and salary.
The dollar amounts. So that goes back to what we were saying. If you did get a bonus or if you did get a pay raise.
Yeah, exactly. So you got payroll costs, all these numbers that are eligible for forgiveness. Okay, these expenses. So that this is your eligible forgiveness without any reduction. So then you take off it, subtract any reduction based upon wages and salary decreases, okay? And that gives you a number. And that number right there is what you multiply by the ratio I just described, the
right.
ratio of full-time equivalent employees during the 8-week period over top of the number of full-time equivalents prior to whatever applicable period prior to the loan. And then again, that right there, the number of employees and stuff, if you bring them back on as of, June, if you look at the total number of employees you have as of June 30th, and it's back to the February 15th number, then you're good.
You're getting 100% of the 75% that you spend or above.
Whatever the number was after the salary wage reductions. But the other thing too is they clarified, and there was some FAQ that clarified this. If you go to someone and ask them to come back and they say no, we're not going to, we're scared, whatever, you're not penalized for that, and you're also not penalized if you fire someone for cause, or if someone comes to you and asks for just a reduction in the number of hours they work because of on their own volition. And so that's another clarification that we have here.
Yeah.
So.
Paul desperately wants to jump in.
Well, I just want to ask you a question, Adam. I know that you guys have a tool. A lot of people downloaded it from the last webinar. Do you plan to update that with some of the stuff that we're just talking about? Is that something that will be all these calculations? Sounds like a lot. Is that possible to put in the tool that you guys built? Do you plan to?
We are, yes. We're gonna update it. The stance we're taking today is just because when this first came out, the application changed about 4 times in about a 6-day period. That we're just waiting. So what typically happens is, not typically, this is so atypical, I shouldn't say that. What we believe is going to happen is they're going to drop this initial application out, and just like the 46 FAQs that we've got associated with the loan, we're going to have a whole bunch of questions about what's this mean, or what's this, if this, then that mean. Even today, we've thrown a lot of data at you all that is challenging to reconcile against. And so what I think is going to happen is they're going to clarify it a little bit more. As they clarify it, as they get to what they're actually giving to the banks to put online, we're going to update our calculator, make sure we get that out to everybody.
Yeah, and we will republish when Adam submits it to us. We'll republish it. We'll email it to everybody so that everybody can go, look at it, download it, and use it once again. And so we've got about 18 minutes. We've got 8 questions still open. I think we may have kind of answered them, but it'd be good to just run through them again. First question is, I got funded on the night of the 20th, but my payroll was on the 20th too. Does that count?
Yes.
Yes,
it does.
We understand it.
Okay. All right.
Now that would begin your 8-week period. If that happened for you, your life is very simple compared to the rest of us, because your 8-week period for non-payroll related expenses and payroll-related expenses are now coinciding to the exact same day, that 20th, versus the rest of us now are going to balance 2 8-week periods. So good job.
And then I think just a clarification, is the definition of the first day of the pay period the day that the pay period starts, not the day that they're actually paid? I think that's right.
The way we're seeing it is the day it's paid. So I mean,
it actually says that it's the date of your first first pay date following
paid date.
First
the
pay
date
date.
they got paid. Okay.
So if your accrual is like you've got some sort of weird 2-month accrual to be paid, and it happened to coincide on the day after you got the loan, well, good on you, because it's the paid date, not the accrual date.
Yeah, that's a question that never got asked. What if you had, payroll that had you had accrued for some reason? You had said for the past 3 months we had,
deferred payroll for cash flow purposes,
or reduction, and we accrued it. You can pay that.
I've got a client that is a nonprofit and couldn't pay anyone for a good month or so before this got their loan proceeds. And so the plant they paid people and caught them up to date.
Caught them up. Okay.
That would be okay.
Okay. All right.
It doesn't say that specifically, but it certainly doesn't say you cannot.
Right.
And it makes sense with the rationale of the statute, behind the statute.
Yeah.
And this goes back to the spirit versus the letter. Like, again, if you're going to try to say something like, "Oh, I accrued last year's payroll and I didn't pay it, and I'm going to use this," I mean, you're probably it's using the extreme. Come on, But if you're saying I had furloughed folks for 2 weeks and accrued that payroll, and now I'm paying them, well, that was the purpose of these loans, was to get cash flow back to the people. So
got it. Okay. If next question is, if payroll is paid twice a month, which is slightly more than 8 weeks, 3 days actually, do I need to deduct the 3 days of pay from the forgiveness, even though it was paid inside that 8-week window?
No.
Nope.
If it's paid within the 8-week window, then you think you're totally fine.
Okay.
Now, again, if you're accelerating pay,
that's
so
different.
it wasn't a scheduled paycheck.
Yeah, that's different.
That's a different question.
Yeah, people are asking me that. Can I change my payroll if I'm every 2 weeks and I want to squeeze another one in? Can I accelerate it and make it another pay period? Like, I'm just saying, don't do that. Like, just
well, you really don't have to, because
that's true. With the new changes, that's true. The law.
Yeah, so
you pretty much are allowed to, even if you pay them. Let's say your 8-week period ends on June 30th, and your next paycheck is July 7th. Then basically whatever amount of pay on that July 7th applied to the period prior to June 30th, you're going to be
okay.
Yeah,
Okay.
you're good.
So just for clarification on that, we're in that boat. We pay twice a month, so we pay on the 1st and the 16th. And I think our date for the end is like June 9th. We won't run a payroll on June 9th. We still run it on June 16th, but it's through June 9th for the piece that's applicable to the forgiveness. Is that correct?
What you probably will want to do, Paul, is make the election to start your payroll, your alternative payroll period on the first pay date of after you got your loan proceeds, right? So that will then allow you to, that should capture both that paycheck and pay period.
Thankfully, I'm a customer of Adam's, and my CFO through Adam is amazing, and so my expectations are she's just gonna handle it.
Yeah. All right. Paul, yesterday we were talking through this, and Trump was giving him an answer, and I was like texting him. I said he doesn't really care what Trump says. He just doesn't trust whatever our CFO says.
All right. So anyhow, the next question is: in a general partnership, is the forgivable portion of the loan simply partner draws for the 8-week period, or is it SE income, i.e., does it include expenses paid on behalf of a general partnership that will be SE income in their K1? This will include health, life, disability, contributions by the employer, personal expenses paid on behalf of the partner. Can you guys see this question, by the way?
Yeah, I'm reading it right now again.
It's a long one, so I'm not sure I even fully said it. I think that everybody can see the question. So
what I'm going to suggest there is that it's yes, compared to the 8-week period, is the draws. If you've got something inside that 8-week period that is applicable to the payroll portion of the forgiveness piece for the partnership, then that would also apply. But if it's something that's done once a year. That kind of goes back to Chris's earlier comments of it's 850 seconds. So if you do something, at the end of the year, like a 401k catch up or something, it's not even, yeah, that's a long question. The 8 week, the draws that are being counted towards, which either is the 15,385 or less than, depending on what you're drawing.
Yeah, cash compensation is 15,385. You're limited to that. So however that kind of fits, in terms of payment, I don't think it really matters when you pay that, to be honest with you, if it's limited to that. And then the non-cash amounts is just going to be when it's paid, ultimately. And so do you want to as Adam said, do you want to get aggressive and include some stuff you pay later in the year now? I'd be cautious doing that. You may be able to in the end. We'll have to wait and see. Or it may be that that the SBA just turns a blind eye to it and doesn't want to know that whether you're.
Yeah, my logic there is if you're under 2 million, you're probably not talking about a consequential enough amount of money. So let's say again our average is 150,000 for small businesses that we serve around the country. We're probably talking about $1,000. Do you really want to put yourself out there for, a couple of $1,000s that you might or might not get forgiven? If you're over 2 million, you're going to get audited. So I wouldn't do it. I would just stick to the rules as tight as you could possibly stick to them. So, I mean, if you're somewhere in that bubble zone of $1 million to 2 million and it's $100,000 swing, then I'm going to let you make your own judgment there. I'm not going to tell you what to do or not to do, and
there may be some opportunity. If it were me, I would wait a little longer to see if additional guidance comes out, like some of the use or in final rules on some of that stuff. So,
Okay. Next one, we use accrual basis for accounting. If we cut the check, can we hold it? For example, if interest was deferred, can we cut the check but hold payment for cash flow purposes?
My answer would probably be no. I think I would assume cash basis on these things for right now.
Okay.
Yeah, I missed.
Like if you're accrual basis and let's say you cut a check for rent, and so you cut your rent check, but you hold the check. You don't actually pay it out. You pay it out maybe in November, later on. I just wouldn't play with that. I think they're probably going to come back and want to do like an audit. I mean, if you were to get audited, I think they'll probably do a deeper dive there and see if it was actually something you spent money on.
Ultimately, it depends on, from my perspective, what time period that check pertains to. And so if it's in the 8 week period, that's really the number, regardless of when you pay it, the portion that's applicable to the 8 week period, and maybe and also the amounts before, if it was applicable to some amount before. So I think ultimately that's how I'd look at it, if it's me.
Okay. Does the calculation of salary include tips?
Yes.
What happens if you...
Let me say that again. When you're comparing how much they made before, my understanding is that's all. There's actually even a special provision on tips that I to be honest with you, I'm not super familiar with. But if you basically, what it comes down to, if it's a tipped employee and you so all the amount that's being reported as paid to them as tips is going to be inclusive, okay? But they are also encouraging you to pay additional amounts of tipped employees, and that amount would be included. So that's one of those scenarios where you could pay them more than they typically would get, with the idea that they're trying to get you that because they understand that tipped employees aren't getting anything right now.
Okay, sorry, there's a printer running in the background. If you hear it, I apologize. What happens if you have an employee who quits? Yeah, I think you answered that they're not gonna, that's okay. I mean, that's out of your control.
Well, let's see. The way it reads is does not say that. It's if you fire them for cause, if you lay them off and then ask them to return. So I would assume if someone quits and you ask them to return, it says ask for a reduction in their hours on their own. I think that's probably pretty similar to quitting. I think I'd feel comfortable with that.
Okay. And if somebody quits and you hire someone else, that's a wash, right? I mean, that's
exactly.
A wash for the ratio to identify.
Because the FTE calculation, forgiveness reduction based on FTEs, is not specific to employees. The wage and salary one is
okay.
Each employee.
Okay. How do new hires, someone that was on your payroll, count? We talked about that toward Dollar and Helican. I think you guys covered that pretty deeply.
I think so too.
Yeah, it came out while we were talking about it. I saw that one pop in.
Yeah. Can you use benefit expenses for W-2 owners in the calculation of PPP allowances? I believe you may have answered that in the chat, Adam.
I think
the
so.
answer is yes, right? I think just applicable to the way the rule works.
Yeah, there's certain expenses associated with payroll that are applied. Let me pull that up real quick.
Now, you're talking about like if you were saying cash value of or something like that. I mean, I think again, it has to be actual cash paid out. So the amount of cash you pay specific employees limited to 15,385. But I mean, if you're talking about the benefits, it's going to be like your healthcare premium,
Right.
Well, this one says benefit expenses for
contributions, but it's actual cash outlays that you're making.
Okay.
And so, but if you're doing that, like for example, the life insurance costs associated with, like say you've got an employee life insurance and you're paying that, and it shows up a cash value on their W-2. I don't think that would be included.
Okay. And I think the specific question is benefit expenses for W-2 owners in the calculation.
Oh, yes. Yeah, that's fine.
The same, yeah.
Same, okay. All right, so this is the last question I think that we actually have that we haven't already answered. We usually pay commissions for the first 6 months at the end of the 6 months. So I guess they would pay commissions through June 30th, sometime in July. Can we pay the commissions for the 8 weeks covered during those 8 weeks, or is that not business as usual?
I read under their the recent changes that they're going to be okay with that. Again, you're going to be in kind of a gray area there, but they're trying to say, if it's incurred in this 8 week period, then you can use it in this 8 week period. Is how I see it. Chris, would you agree?
I would go further, and I would feel comfortable. I would, if it were me, I would, because it's payable on June 30th. I mean, the allocable portion to the entire first part of the year.
You could make that argument. Yeah.
Right now, there's nothing that says you cannot do that unless there's some additional guidance that comes out that says you can't. I would do it because I mean it's paid.
It is paid. Yep.
And maybe it's payable on June 30th, but it relates to the first full half of the year. So I would have no problems accelerating that payment date too, if it's me.
Another question came in, then we need to wrap up. I'm a single employee LLC. I have no expenses to pay. I'm based out of my house. My only expense is my salary. Can I use 100% of the money from my salary? I only get paid once a month via a sales agency that I work with. Just to be clear as well, should I calculate my tax portion for my quarterly taxes to be paid from these loan monies? A bit of a, I guess the first part of that question is single, member LLC, just him, no expenses, just his salary.
Yeah, capped at 15,385, but I think that you could take that full amount. I mean, if your PPP was 20, you can't take it all, but if it was 15,000, then you could take that, even if it was a little above what you typically made in the past, based on how we're
dependent on the numbers. Okay. And the last thing, what about benefits for K1 partners? Can you use those costs in the calculation?
Again, it's just like the last one. Any benefits,
just like an employee.
Paid employee.
So it's just the same. It's the same. Okay. All right. All right, we need to wrap it up. Thanks a ton to you two guys. Thanks for everybody that jumped on. Obviously, PPP loan forgiveness has zero to do with IT, but
you're a great host.
Except for Adam's spreadsheet is maybe a little technical.
There you go.
and Zoom.
One thing maybe Paul just add real briefly. We didn't get to this because we ran out of time, but the application instructions have a detail of the documentation you're going to be required to submit and maintain.
Okay.
And so I would encourage folks to look at that application sooner rather than later, so that they make sure it's largely consistent with some of the guidance they've already given, but it is more detailed than.
Okay. Well, and our plan is to within 24 hours, we'll get you an email with a link to this recorded webinar, a link to the audio version of it, a link to the application. We don't have any non-answer questions, so we don't have that. And once Adam's team gets their spreadsheet updated, their tool updated, we'll send that out too. So that's what's next. And if there's more information and guidance in a week, we'll do this again. We're just trying to do this as a service really to our clients and friends, and as a means to help people in the market. So appreciate you two guys. Appreciate everybody that joined, and we'll see you next time.
See you, everybody.